Gross pay is the base salary before the quote-unquote gross taxes and other deductions come out. I like to remember it as, ew, gross, you lied to me. It's your salary, but not what you actually see deposited into your account. Net pay is after all of the taxes and other deductions are deducted from the gross amount. That number is the actual amount that's deposited into your account. I like to remember it as the money you get to catch in your net after everything's taken out. Maximizing savings using pre-tax deductions. Pre-tax deductions will help lower your taxable income. Remember the gross versus net pay we just talked about? This is where that really comes into play, because less taxable income will equal less tax liability, which is the amount that you have to pay in taxes every year. Voluntary deductions may vary, but generally include the employee-paid part of healthcare expenses or healthcare plans, flexible healthcare and dependent care spending accounts or cards, retirement plans such as 401ks, traditional IRAs, pension plans, state retirement plans, and more. It is important to note that Roth IRAs are post-tax deductions, and traditional IRAs are pre-tax deductions. So post-tax deductions doesn't really lower your taxable income, whereas pre-tax deductions will. Another thing that is often a pre-tax deduction is group term life insurance. Now this doesn't include the employer part that's paid. This is only the part that comes out of your paycheck as a deduction. One of the best ways to maximize savings using pre-tax deductions are FSAs, because you are getting a tax break or you're lowering your tax incomes buying things that you may buy every day anyway. Most people overlook FSAs or flexible spending accounts because they have minimal copays or don't go to the doctor often or don't, have that many prescriptions. But FSAs can be used for so much more. Make sure to check your company offerings. FSAs, you can buy feminine hygiene products, sunscreen, over-the-counter medications such as Aleve or cold medicine, prescription glasses, dental copays, first aid kits, acupuncture and chiropractic services, and much more. These are things that a lot of people will spend every day but don't realize that it's covered under the FSA. You can select an FSA account even if you don't have healthcare coverage through your employer or otherwise, so even if you don't have any healthcare coverage. Since this is a pre-tax item, this will save you money by buying everyday items you normally would anyway, while lowering your taxable income. In 2024, the maximum that you can elect per IRS guidelines is $3,200. This can be especially helpful if you're quote-unquote riding the line between two tax brackets. For example, if you're single and you have no deductions and you make $103,000 per year gross, if you were to elect $3,000 for your FSA plan, that can save you up to $720 in federal taxes. And depending on your state, it can also save you in state taxes as well. Now, it is also important to note that if you don't use it within the plan year or the grace period, which you'll need to find out from your employer, you will lose it. It doesn't roll over for the most part year over year. So it's important to know your plan year and make sure you're spending and buying the things that you need. A lot of companies have FSA store websites where you can browse the selections to see what you could possibly use the FSA for to lower your taxable income while buying things you would anyway. So buckle up. This is one of the most confusing things to most people, is understanding tax tables and tax brackets. So you pay tax as a percentage of your income in layers, which are called tax brackets. As your income goes up, the tax rate on the next layer of income is generally higher. When your income jumps to a higher tax bracket, you don't pay the higher rate on the entire income, you pay the higher rate on only the part that's in the new tax bracket. Tax brackets generally change every year, so that means your tax is taken from your paycheck, and how much you owe or get as a refund in general may change, even if you haven't changed your W-4 form withholdings. Taxes are based off of your gross taxable income and the corresponding tax brackets. Some systems use annual salary to calculate it, and some are based on monthly salary. As good old Benjamin Franklin said, in this world, nothing is certain but death and taxes. In this next slide, I'll go over some examples to help you visualize it a little bit better. So tax liability is how much you should or should have paid in taxes that year or had withheld from your check. Here's the 2024 tax table. Remember, you can't just select the line with your income and assume that's the percentage of taxes. Taxes work in layers. So for a single person making over $11,600 in taxable income, after the standard deduction is removed, you can automatically assume that you'll have at least $1,600 in taxable liability for the year. So the standard deduction is essentially the 27,000 or however much for married, single, etc. That is how much that the government says, like, that's your limit. That's how much, you can make without paying any taxes. Once you get past that limit, anything above the standard deduction is your taxable income, and that's what you're going to be taxed on. So for each amount that falls within each bracket, it'll calculate in the layer. For example, you are single and zero, and your taxable income for 2024 is $50,000. After the standard deduction, your tax liability will be calculated as: you will take 10% of $11,600, which is $1,600. Then you will take 12% of $33,550. That will make a tax liability of $4,266 for that portion. The remaining amount that's going to be in the next bracket of 22% is $4,850. So 22% of $4,850 is $1,067 in a tax liability. So your tax average is going to be 13.87%, because that's taking the amount of tax liability and dividing that by your $50,000 income. So if you look, you see $11,600 plus $33,550 plus $4,850 equals your total taxable income of $50,000. When you add up your tax liability of $1,600, $4,266, and $1,067, you have a total tax liability that year of $6,933. So that's how much you should have taken out of your check throughout the year. I always recommend that you check your paycheck stubs every month to make sure that the correct amount of taxes are coming out. And it can vary month by month on how much you make or how your payroll operating system removes the taxes. But always check early in the year so that you don't end up having a big surprise when you go to file taxes the next year. All right, so the wrap up and some friendly reminders. Remember to read each step in the W-4 to ensure that you fill it out correctly based on your individual situation. Don't be afraid to reach out to a tax preparer or CPA if you need help on what to fill out on your W-4. Remember, the person processing your paperwork or onboarding you can't give you advice for liability purposes, but there are other resources as well. If you are married and filing jointly, talk with your spouse to determine who is claiming the children on their W-4. Pay attention to the stipulations of head of household. If it's just you in your household, you probably should not be claiming head of household. If you have more than one income in the household, pay special attention to box 2C to determine whether you should check that box or not. Check your pay stub early in the year and change your W-4 if needed. Only you can make sure that your taxes are correct, because even when you give your information to the tax preparer, you're still going to tell them whether you only claim your child, or you have two incomes, you're going to make sure to give them your spouse's income as well, or you have two jobs, etc. So just make sure to check yourself thoroughly and make sure that your taxes are coming out correctly, because once taxes are taken out, generally that can't be reversed. So you need to make sure that you're checking your paycheck stub and your withholdings. So these are some of the references I used when formulating this presentation. I'd recommend taking a screenshot of it because this could come in handy when you are trying to do additional research for yourself. Because like I said, I can't cover every single tax situation. We will literally be here for 2 freaking years instead of 30 minutes. Thank you for your time today. I hope this helps you better understand your taxes and how to fill out your tax forms to take better control of your finances and tax situations. If you have any questions, you can reach out to me at my business email, solisbymk@outlook.com. Remember to check your paycheck stubs and just make sure that you are on top of your own finances. Thank you and have a great rest of your day or night.